There's a name out there that released their first quarter financial results last week. And while they aren't Canadian listed, so we wouldn't normally cover them, they are a major copper producer alongside gold and molybdenum. So for our viewers, we thought it was imperative that we give them some airtime as well. That name, of course, is Freeport McMoRan, who on Thursday, despite producing what we would call mixed results, managed to beat consensus estimates like most of their peers this cycle. Let's dive in. Freeport in the first quarter posted revenue of $5.7 billion, which was a 6% beat over the street's expectations of $5.4 billion in revenue. But it was also a decline of 9% on a year-over-year basis from $6.3 billion. The decline follows copper sales falling from 1.1 billion pounds in Q1 last year to 872 million pounds this year, following a planned major maintenance project in Indonesia. That outage also impacted gold sales, which slipped from 568,000 ounces to 128,000 ounces. And well, in this environment, you can imagine how much that impacted things. Part of the gold sales decline was also said to be impacted by the timing of shipments, with guidance having called for sales of 225,000 ounces. Molybdenum sales, meanwhile, were flat at 20 million pounds year over year. Both copper and gold sales are expected to increase from here for the remainder of the year, but more on that in a bit. Operating income in the first quarter slipped from $1.6 billion to $1.3 billion, a 20% decline year over year, which again is related to the major maintenance in Indonesia. While net income fell from $473 million or 32 cents per share in the first quarter of last year to $352 million or 24 cents per share in Q1 2025. That 24 cents per share EPS also met street expectations, despite the year over year decline. The largest decline here, however, was seen in operating cash flows, which fell from $1.9 billion to $1.1 billion year over year, a 44% tumble. In terms of the balance sheet, Freeport saw its cash and cash equivalent position reduced from $5.2 billion to $4.4 billion over the course of the last 12 months, while total debt has managed to stay flat at just $9.4 billion. Net debt overall is said to currently sit at $1.5 billion as of quarter end. Share buybacks during the quarter, meanwhile, totaled 1.4 million shares at a cost of $55 million. Year to date, Freeport has spent $80 million repurchasing 2.3 million shares, with total purchases under the $5 billion buyback program amounting to 51 million shares at a cost of $2 billion. Lastly, Freeport, as of quarter end, declared a Q1 dividend of 15 cents per share, half of which is the quarterly base dividend, while the other half is a variable performance-based dividend. All right, so let's get into the production data. Freeport in the first quarter produced 868 million pounds of copper, which was down from 1.1 billion pounds in the first quarter of last year. As we already mentioned, this is due to that planned major maintenance at Freeport's Indonesian operations. Net cash costs on those pounds, meanwhile, increased substantially year over year, from $1.51 to $2.07 per pound, while site production and delivery costs per pound moved from $2.32 to $2.59 per pound. These massive increases appear to be a one-off, however, because fewer pounds produced means fewer pounds for those fixed costs to be spread across. The average realized copper price, meanwhile, increased from $3.94 to $4.44 per pound, which no doubt helped absorb some of those higher costs on a per pound basis. Gold production, meanwhile, fell from 549,000 ounces to 287,000 ounces. While per ounce cost metrics were not provided, the average realized sales price on those ounces were up by nearly $1,000, going from $21.45 an ounce to $30.72 an ounce. Lastly, molybdenum production was actually up year over year, from 18 to 23 million pounds, while the average realized price per pound moved from $20.38 to $21.67. As it stands, Freeport isn't yet changing their outlook for 2025. The company still expects to see sales volume of 4 billion pounds of copper, 1.6 million ounces of gold, and 88 million pounds of molybdenum. For the second quarter, sales, meanwhile, are expected to amount to 1 billion pounds of copper, 500,000 ounces of gold, and 22 million pounds of molybdenum, which is basically Freeport's way of saying its operations are back on track after that maintenance impact. Cash costs are expected to move in the opposite direction, with cash costs for both Q2 and all of 2025 expected to be in the area of $1.50 a pound, excluding the impact of tariffs, which is down from prior guidance of $1.60 a pound. That figure assumes that gold prices stay around $3,000 an ounce of gold, however, and that molybdenum prices sit around $20 a pound. And speaking of tariffs, Freeport actually stands to benefit from tariffs on copper. The company currently accounts for 70% of all copper production in the U.S. and is said to have several initiatives in place to increase domestic production even further, including some new leaching tech that is expected to hit a run rate of 300 million pounds of copper recovered per year across their U.S. and South American operations by the end of the year. While copper imports are currently exempted while a Section 232 investigation is ongoing, Freeport has stated that pricing in the U.S. is 6% higher on the copper produced domestically versus the copper produced at their Southern American and Indonesian operations. Further exemplifying this, on April 23rd, COMEX pricing stood at $4.84 per pound of copper versus LME pricing of $4.27 per pound. Multiple analysts, meanwhile, have commented that Freeport has been declining amid the tariff talk, despite being the outfit that will benefit the most. All right, so let's wrap it up. Freeport's first quarter was better than analysts expected, but overall worse than the first quarter of 2024. But with that being said, it's not like business, especially the mining business, operates in a straight line. Maintenance needs to occur to ensure the long-term viability of operations, and it's not like minerals sit in the ground evenly distributed. There's going to be ups and downs. Anyways, Freeport appears to be unfazed by the performance of the quarter, and being the largest benefactor of potential tariffs on the import of copper, well, Freeport is in a great position for the next 4 years at a minimum, all things considered. For investors' sake, the market just needs to realize that. All right, everybody, we are in the thick of earnings season. If there's stories you want us to cover, let us know in the comments section. Also, what do you guys think of Freeport McMoRan? Is it a good buy here with everything that Trump's doing? Let me know in the comments section. All right, everybody, if you enjoyed this content, please smash that like button, subscribe, ring that notification bell. Thanks for watching, everyone.